those issues left on the agenda, but Raamdeo Agrawal waiting by. Prashant, over to you.
Well, okay, I'll take it over from here. Shireen, Raamdeo Agrawal, thank you very much for joining us. First thoughts, Raamdeo, the market sulking over STT, but after it gets over, are there positives?
Yeah, I think total highlight is the data center tax benefit for next 22 years. That's the key highlight, because data center is the biggest infra build all over the world. Biggest, like running into trillions of dollars. And we were not participating at that force. And now with this, it looks that doors are open for the AI, the impact of AI coming into India. And we want to make India as an AI factory of the world. And hence, this is the first initiative. And I think it's a very laudable one. I remember the software boom happened in India in 90s because of the STP benefit which they gave, where 10 years it was tax-free. So I think it's a very powerful tool to attract the investments. India has the lowest cost of power, lowest cost of infrastructure, and very large AI population. So yeah. I think it's a very significant one,
yeah.
And it has a lot of correlations in terms of which are going to be the beneficiary.
Yeah.
Because you need a lot of air conditioning, you need a lot of cables, you need a lot of construction, real estate construction. So let's see, how it happens and what kind of, at what size the data centers start coming up all over the country wherever there is excess power. So it can fire up massive capex because it's very capital intensive. So it can fire up very large capital spending projects if it is handled well.
Mr. Agrawal, Raamdeo good afternoon.
Yeah.
The only thing is, I was talking to somebody who works in the field who was saying that this is, and the tax experts told us, it's a data center providing cloud services for foreign companies. For local income is taxed. Yes. It is foreign companies. So this consultant who was talking to was saying, how will they, data sovereignty is such a big thing that, like, for example, India wants its own data within its borders. So how is this going to, maybe the policy detail will have something, but Meta is not going to set up a data center to service its American customers, right? Because they want American data in America. So how will this really work or benefit? That's the only question, which was raised to me by somebody.
Yeah, so I think I also don't have any more detail than what I've heard here. But America is not the only country in the world to use AI.
Any company, any country,
million.
Yeah.
Any country. So we could be supplying to non-American or non-European destinations. For Nepal, Bangladesh, Pakistan, your entire Middle East. I think this is a place where you should have the data center and the services manufactured here. So there are enough geographies where who cannot set up their own data centers would be finding it here to be set up the possibility. But those are different issues, Prashant.
Yeah.
Right now, the issue is that this is a very big initiative, and whatever changes are to be made in terms of taxation change, I think that will come through.
Yeah.
I don't see any reason why you tax a data center serving to the foreigners and not to the domestic users.
Yeah, I take your point on that. That is one advantage.
Just one thing, Gokuldas, if you can pull up Gokuldas, I'm not sure there's something, as the day goes by, as always happens, more and more details come through. Gokuldas is up 10%. It surged to the day's high, above 600 rupees. Just wanted to highlight that. Go on, Lata.
No, I agree with you, because she has been speaking about textiles and the advantages they get. So we have to go with a fine-tooth comb to see how Gokuldas may be advantaged. Raamdeo, that's exactly what I wanted to ask you. The companies which do CDMO, kind of completely knocked down and then re-exporting, especially from SEZs, they are getting not a 5-year but a 10-year tax holiday. There are some nuggets like this, and there are companies like Keynes which are doing very well. Likewise, the API companies are doing very well, probably because of this. Can you notice sector-wise any advantages from the budget speech?
No, actually, I got spooked with the capital market proposals, about the STT and the impact of that in the market. So that was one part of it, and the buyback relief for the retail investors.
Yes,
that was one part of it. Third was this. What I saw about this data center exemption. This is very big, and I think it dwarfs every other proposal of the budget. This itself is a 1,000-pound gorilla.
Okay. What about NRIs allowed to come into PMSs in India? Would that look very big?
Which one?
NRIs used to buy shares directly. Now they can put money in PMSs in India. What they call PROIs. The NRI word is permanent resident outside India. There seems to be a lot of concessions for them to come through PMS companies. Has that been noticed by your team?
Yeah, we saw that, but they're all at the margin. If we markets do well, if the earnings come through, I think these things are going to help, but they're marginal in the sense that I don't think that's going to have that much of impact in the short run.
Okay.
By the way, Raamdeo, from your broking business, broking business head and team, etc., any feedback on this STT?
Yeah, so good. One thing is that today is Sunday, all the institutions are closed, local as well as global, and FIs are definitely out of the market today. So real impact of this will be seen tomorrow in terms of how are they thinking about this particular thing, because a lot of marginal trades will become unviable. So the high frequency traders, for them it will be unviable. A lot of it will be unviable. Second, there are a lot of products, arbitrage products, where a lot of money is there. Those will become unviable, and hence there will be a lot of redemption in those products whenever this new regime comes in.
Okay.
So the market will get less leverage and less liquid. So the impact on the market will be a little more bearish because of this particular provision, because the sheer viability of a lot of trades will not be there. So we'll see the full impact of it tomorrow. Good thing is, I think these things are applicable only from 1st April. So we have some time for the market to adjust.
Raamdeo, FIIs, when they come back tomorrow, will they press the buy button or the sell button?
That is for you to decide.
No.
I don't think this is a buy. Yeah. This measure is not a buy measure. So obviously one has to figure out how much they sell, how furious they are. Basically, it all depends on. In any case, they were on an exit mode. So will it trigger further exit? Because right now the global market has so many stress points. This is not opportune time to actually give one more headache to them.
Okay.
This is a time to keep them at least peaceful at home, and not trouble them, because they are already suffering from.
And you were saying that this at the margin, and Raamdeo, and you're saying at the margin this will trouble them. You're saying how furious they are. We'll have to see. Yeah.
That we'll have to see tomorrow only. I mean, right now, my information is not that much more. I can just speak to some of my traders here, because those guys are actually on holiday. Today is Sunday.
No, I get it. Raamdeo ji, there's one more.
Know only tomorrow. I hope the impact is minimal, because we have still got 2 months time for it to get implemented. So tomorrow itself, they don't have to do anything. But incrementally, I don't think it's a very positive measure for their activities in India.
Okay, just a final question to you, Raamdeo ji. Excise duty, union excise duty, according to the budget papers, budget at a glance, is rising by 6%. Now, union excise duty is applied only on oil marketing, right? Oil products. So, do you think this is going to look like OMC negative? Usually, the excise duty in a typical year rises by maybe 3%. This is 6%, the total kitty.
Okay, so they might be expecting 5-6% volume growth during the year. At current prices, they might be expecting 5-6% volume growth. Or maybe some mix change or something like that. So 5-6% doesn't look that alarming.
Okay. Well, we've got some more guests joining us. Rajiv Anand, the Managing Director and the CEO at IndusInd Bank. Nirmal Jain, founder of IIFL Group. Gentlemen, thank you very much for your time. Rajiv, two things for banks. One, the borrowing number, 17.2 lakh crore. First, your thoughts on that.
I think it's a little higher than expected, but one would imagine that RBI will manage as they have every year through a mix of OMOs and switches. So I don't think, yes, the gross borrowing program is a bit of a concern, but I think if you look at it at a net number, the numbers don't look alarming. I think more importantly, the fiscal math at 10% nominal looks, very, very credible. And I think there is a little bit of leeway in terms of non-tax receipts as well. Yes, I think in the very short term, a little negative, but yeah, and you will probably see yields going up a little bit on Monday.
Yeah.
But I think that should adjust itself over a period of time.
No, I agree with you completely. The fiscal math is excellent. No aggressive assumptions. And then there is this banking committee they have appointed to suggest reforms ahead. Is that looking like a very big positive? I mean, ownership, voting rights, everything could be up for changes?
I think those are the two big ones, isn't it? I mean, I think there's been a lot of debate around ownership of banks, here in India, and this disconnect between ownership and voting rights. I think that will form the crux of how the banking industry in India will get built over the next 25 years. We begin to see, the first cut of that. We've seen a couple of transactions where there's been a fundamental shift in the way that the regulator has thought about the SMBC Yes Bank transaction and the Emirates RBL transaction. Is in a sense showing you the way that the regulator is thinking about these issues.
Raamdeo ji, if I can come to you, there's one specific thing, which is dividends from mutual fund cannot be set off against dividend income cannot be set off against interest paid on borrowings. Is that I was just checking with the tax expert. Is that a big thing? Will that have a big impact
Within mutual funds?
No, dividend from mutual funds. You could have set off up to 20% against interest paid on borrowings. That has gone away. That is what our tax experts Dinesh Kanabar and Ashok Wadhwa. So I'm just thinking, will this apply to like leverage trades and all? People borrowing to, and this will be largely for investment companies and HNIs, etc. But could it have a big impact?
I think it's very individualistic in the sense that who is doing leverage trade and those kind of guys, they will not get the break against the dividend what interest they are paying. So you have to pay tax on that. So I think it will be very marginal. For most of the guys, overall aggregate, I don't think it's big.
Okay. Nirmal Jain is with us as well. Nirmal, if you can come in on this particular aspect, interest cannot be offset against dividends you get on mutual funds. Any thoughts here?
I mean, it's a little negative because 20% what was allowed earlier, so it might increase tax liability a little. I mean, the overall scheme of things, this is not a significant mover or shaker in the market.
Okay. What I'll do is, I have more questions for both Nirmal and Rajiv. Raamdeo ji, thank you very much for joining us right now. So, and you have a busy day ahead, so we'll see you later. We'll just take a very quick break here. Come right back with Rajiv Anand and Nirmal Jain.